Everything I learn in my course is so academic. It's so historical too. I want to learn something new, and I want to learn something special.
Did you say something special?
Absolutely.
Well, I got a brew for you.
Welcome to the first episode of the Special Brew. Today we have Mark Shackleton, professor at Lancaster University Management School. My name is Rohit Bonagri. I'm an events executive at the Lancaster University Investment and Finance Society. The topics for today's session: windfall taxes, the autumn budget, renewable energy, India, and last but not least, Rishi Sunak, the Prime Minister of the UK. The coffee served today in the Special Brew is my special French vanilla hazelnut coffee. The coffee recipe will be in the description, whether you're listening on a podcast or if you're listening on the video. On our panel, we have 4 MBA students from LUMS, or the Lancaster University Management School. To start with, we have Aniket Deshpande. He's got 6 years in the renewable energy sector. Sanket Pujari, 4 years in investment banking. Radhika Khemka, chartered accountant, and also the president of the McCormick Consulting Group, which is a part of LUIFS. And last but not least, we got Rahul Kamath. He's worked 12 years in the industry in IB and M&A. So hope you enjoyed this episode. And this is a Special Brew.
Thank you very much for the coffee. I really appreciate it. And the brew tastes very special and very tasty.
It does.
So what do you think the topics of the day are? What do you think we should be talking about?
So basically, I'm new to the UK, and I heard that recently there was a budget change done on 17th of November. So any reason why this date was moved and why this specific date was used? Oh,
So I think the first budget went through too fast and too quick, and it hadn't been scrutinised by the Budget Responsibility Office and other factors as well, and it wasn't very well received. So I think second time around, there was a lot of pressure to try and get it right, so it got put back, and I think it's still being scrutinised further. But we did have a budget statement yesterday, which has been much better received than the one 6 weeks ago.
One of the major highlights of the budget has been the entire cost of living crisis as to how a typical household would be affected by the recent changes.
Yes.
Lots of clauses. I think the one most emphasized upon is the energy price one, where every household gets a direct £400 allowance on their house bills, electricity bills, and even in some cases they get about a £600 allowance in tranches. But with the rising energy prices, what does it typically mean for a household in terms of the cost of living? How does it mean? Are they going to be having to save up, or do they have to be, a lot more levied about their expenses?
So even before the crisis in Ukraine, I think there were some price increasing pressures. I think they've been exacerbated by the fuel crisis. And of course, we've had to have some special measures to try and help and restore some budgets to some individuals over their household energy bills. I think the government's trying to still provide incentives for people to save energy and spare energy. And so when they talk about a price cap, they're thinking about of a notional number of units, and they're not actually guaranteeing that everyone's fuel bill will be within that particular level. And I think they still do want people to save money. The sums of money per household, you've mentioned them, so thanks for that. I think there is help available. But of course, when we add them up right across the economy, it's quite large sums of money. The government's got to fit that within an overall budget scheme, both in terms of per annum and also how long. But in fact, actually, the statement yesterday did actually extend some of the energy programs beyond 18 months, which I think has offered people some assurance.
And the interesting fact about this whole turnaround of autumn statements, one with former Chancellor Quating and now from Chancellor Hunt, is the polarity. Quating's statement, the statement that he gave was the largest tax cut budget in Britain's history of the last 50 years, I guess. And Hunt's has been the largest tax rise, close to 45 billion, and this has been the largest tax rise in last 30 years, I guess. So that's what has maybe spiked up the uncertainty angle.
Yes.
To quite a degree, I guess.
Yes.
Not just across industry, but across the common people as well.
Absolutely. So the Conservative Party in government have got a strong internal discussion about how to win the next election, which must be 2 years away. The prior view was to be very aggressive and to try and do things quickly. I think the new regime now are going to try and do things more slowly. And in fact, some people say they might be trying to set a trap for the Labour at the next election by making some of these austerity measures and cuts come after the next election, or to span the period of the next election, and challenging the Labour government to try and reverse that policy during a time of election. But whatever the politics, global inflation is high and energy prices are high, and whichever party of the day, we'd be having to deal with these issues inside the country.
Yeah, and that's interesting because the shadow chancellor has been saying that we've been demanding the windfall taxes and tax rise for over a year now, and you are 9 months late into the scene.
Absolutely.
You're doing what we've been demanding so far.
Stealing Labour's clothes.
Yeah.
Yeah, exactly. Very good.
Because the energy companies have made abnormal profits because of the high oil prices, the government has introduced the windfall tax. Can you give your opinion on that and how difficult it is to measure it?
Thank you, Rahul. So the profitability of these firms is extremely high right now. It's not clear if that'll continue. And of course, if these resources are a common resource, people say, well, why should those profits go to just one set of shareholders? The prospect of a windfall tax is political. And of course, one of the negative aspects, even if you can raise some money from the oil and gas companies now, is that it might deter future investment in the segment, because future investors might say, well, this uncertainty is going to drive us away from this market. But the political necessities will probably drive the government to want to reclaim some money from this sector. I think the more interesting question is, apart from oil and gas, how the government is going to treat the renewable sector.
So it's interesting that you spoke about the government in their bid to try to level the playing field, not just target the oil and gas companies, but the electricity generators as a whole. And 40% of UK's electricity generation is coming from renewables, and it is viewed as a kind of a global leader when it comes to pushing renewable energy installations and increasing generations year after year.
Yes.
Don't you think that the 45% levy on electricity generation would target the renewable energy sector in a very bad way, because the CFD mechanism sort of gave them the security of prices and helped the energy sector kind of make their costing and whatever the modeling and everything in a much better manner. And the 45% levy is kind of like throwing spanner in the works of companies who did businesses the old way, the PPA way. And until unless the CFD mechanism is broadened or a new mechanism is adopted, don't you think it's premature to add the taxes on electricity generators?
So you mentioned the contracts for differences in the electric market. Obviously, there are other generators even before the renewables who have benefited from such long-term contracts with the grid system, including the nuclear generators. And obviously that comes down to a discussion and negotiation between the government and them as to at what price the electricity unit price should be allowed to escalate in order to support their capital expenditure costs. I think that conversation should be repeated for renewables. And if the government wishes to level the playing field and tax energy from renewables as well as oil and gas moving into the future, then that provides a level playing field. And then the prices on those contracts for different CFDs will have to incorporate that. So it should be built into that. I think we've got an understanding in the country that energy is going to become more expensive. And although it's going to be tough for some individuals, this will provide incentives for them to spare energy and insulate their homes. So from an economic perspective, we are going to see more investment in energy mitigation. So the sector's changing very quickly. It's being asked to take on lots of transition costs. And I think the government is trying to encourage investment and not upset that by changing its regulation too frequently.
Yeah, so when you talk about energy mitigation, I think when it comes to these levies, only the big power generating units would be affected by it, not the small ones. And this kind of incentivizes the big companies to look how can they decentralize their portfolio and look for low carbon solutions that cater to a specific community or small businesses,
Yes.
so that they can also have some sort of hedging
Yes.
with the outflow that they are having because of the levy.
Yes. Small businesses might also be offered interruptible contracts,
Yeah.
which allows them to buy cheaper power when production is good. And so that's another flexibility. But of course, Britain exchanges power with the continent, 6 or 7 interconnectors. And so the main thing is to make use of the renewable energy that Britain does generate and make sure it doesn't go to waste and is exported. And on the reciprocal side, to import at times when we need energy and when our demand is high and when the wind is low. But it's a rapidly evolving sector. It's a very interesting sector.
I had a follow-up question to that because it's interesting that you mentioned that the high energy prices levy would kind of scare away the other players who want to get into the market. But I was also reading up that there's a lot of investment allowance that the government is enforcing.
Yes.
But I'm not too sure if it's only in the form of renewable energy or the existing form of fossil fuel energy. But in either way, if for an entity there is investment allowance and higher energy prices, what does it leave them net? Like, what is the next plan of action going to be? Are they going to invest in newer forms, or are they going to exist in the original forms and pay higher taxes?
So the renewable generators have got very different cost dynamics compared to oil and gas, where the extraction costs still remain. So once a solar plant or a wind farm is built, then you want it to run as maximum as possible because there's no cost of production. So they've got a different fixed versus variable cost structure to the oil and gas sector, and that might make a play in terms of the tax allowability or the offset. But I think having future unknown tax rates is an uncertainty the industry does not want. I think they're happy to take on the energy risk because they can model and study that, and I think they view that as their expertise. But they don't want to spend time unpicking the politics of future taxes, which is why the windfall taxes are a bother to them. However they go in terms of these things, I think it's clear that consumers and investors want to see this sector decarbonise. And in the short term, even if the rates of return on green energy are slightly lower, I don't think that'll stop investors from wanting to decarbonise their portfolios.
Because it also helps with other ratings in terms of investment.
Yes, and I think they just view that as being purposeful, and they view that as being a longer term play, even if in the next 2 to 3 years the oil and gas sector continues to make very, very high profits.
So yeah, when it comes to decarbonization in the energy sector, I come from India and I've worked in the renewable energy sector about for almost 7 years.
Very good.
And I've seen the energy landscape transform back in India, and I've seen people companies who were traditionally in the oil and gas energy area have diversified and have come up in a big way in the renewable energy space. We are talking about giants like Reliance, Adani, Jindal Steel, and these were heavily dependent on conventional power.
Right. So if UK is around 40% wind, so maybe another 3-4%, at least 10% add, so must be 50% total renewables. India, you are saying, is decarbonizing very fast. So I'm just wondering where the fossil fuel demand comes from currently, because
So I would say that there are many markets, especially in the developing countries, that have not been able to decarbonize at the pace that Western world has. India is at the forefront among the emerging economies. I would say that.
do you have the statistic for India, just like you had for the UK?
Yeah, of course.
If you can throw some light on that.
Yeah. So in India, 40% nearing 40% installed capacity of renewables.
Okay.
And when it comes to generation, even if I factor in the peak power generation, it is around 33%.
Okay, that's a very high
Yeah.
number.
Yeah, that's a very high number because in 2014 we started off with a very low number of say 10 to 12 gigawatts of installed renewable energy, but now we are nearing 140 gigawatts in 8 years of time. So having an ambitious target helps,
Yes.
and not just having an ambitious target, but to back it up with a consistent strategy or a roadmap.
Yeah.
So what India did was something slightly similar to CFD, because India introduced right after 3 years they introduced auction-based sale of power. So that drove the cost down of renewable energy, and this was a cue for the fossil fuel based companies to come into the sector, and that drove up the installations. I'd say a very exponential pace.
So, Professor Mark, so I'm not actually aware about what this is. So, in my opinion, ideally the government should be providing a lot of tax subsidies and depreciation subsidies to the companies that are actually achieving or they're targeting to achieve the net carbon zero by 2050. I'm not sure about what the term is that the government usually gives to the companies in the initial years. Maybe Radhika, as your chartered accountant, maybe you can throw some light on this.
Thank you, Sanket. Actually, very fairly, as a chartered accountant, at every autumn budget statements, the first attention of mine goes to the taxes part of it. So I'll come to that in a bit. But I really wanted to talk about the incentives and subsidies that you were asking. So there are incentive allowances that the government is giving for every investment that is made into the energy sector. Post that, there are a lot of additional depreciations for fixing any sort of capital machinery that the company invests into. There is also a moratorium period that companies get in their first or couple of years of their investment, so that it gives them a sort of leeway on their cash burnout rate, which can be focused towards operations, and they do not have to worry about their interests. Also, on the personal income tax side, there are a lot of leeways currently which have been skewed. So there is the dividend allowance threshold, which has been reduced. And there's also the capital gain tax allowance, which has been reduced. So it was earlier 12,000 and now it's become 6,000, which is going to be refined to 3,000 in 2024. What this means for companies is that all those companies which were giving dividends in the past are now sort of going to be rethinking this, because the dividend allowance threshold has been reduced. So they have all the more reasons to say that, oh, you know what, we're not going to be declaring dividends because it's already going to be taxed a lot more for the individuals. So it's a huge, I'm sure there's a huge ulterior strategy that's going behind this, but it's quite a well thought plan, is what I think.
Very good.
So, Rahul, I think you have a thought in your mind. Would you like to share?
Yeah, sure. So she was talking about the reduction in the dividend allowance, which means that more dividends are going to be taxable, and already people are hard pressed by inflation because of energy crisis. Maybe I think I'm trying to link it to the mail on the people on the bus strikes that I read about, which are happening currently in London. Maybe people are really frustrated. I would like to get, professor's views on this.
So these strikes from a consumer perspective are very frustrating, but the cost of living is going up and workers need to make sure they're adequately paid. This week, the minimum wage in the UK was increased, and I think lots of other workers are going to want to tackle this and have a discussion with their employers. How do these discussions go in your countries, in India? How do they go?
So back in India, it's more of a give and take. So it's very quick in terms of retaliation. There are huge protests which happen as and when the budget statements come out, like how they're happening right in the UK as well. And that causes revisions or amendments for private sector companies to revise their budgets or annual wages for sure. Lot of similarities which I can draw parallels also to the UK. But it's a lot confusing for me in the UK economy because the statistics are quite all over. When there are energy strike or workers having or going on strike, there is also a labor shortage that the economy is showing off, and it's inviting migrants, drawing up a lot more treaties, especially with India recently, to draw more migrant workers. Why are they planning to draw more workers if they can't pay the existing ones?
Well, that's a very good question. And I think lots of employers are going to have to work out how to pay more in order to tempt people back into the workforce. Of course, productivity is low. The UK population is aging, and the dependency ratio in the UK is going the way of Western Europe and is not good. So from the government's perspective, the opportunity of having people come to the country and migrate, particularly at a young age, for work and for tax work that become part of the workforce is a very easy proposition.
It's very interesting because this draws another question and slightly more deeper, that this leads to, and a lot of economies have reported this, that this leads to something called the brain drain. Now, what that means is that every economy at one point of time
Yes.
would lose out on their most talented or intellectual
Yeah.
set of people.
Potentially, yeah.
Yeah. So it's for lack of a better word, I'm gonna use the UK's poaching
Okay.
the best of the talents from the world, which includes India.
Yeah.
Now, at one point, probably India will have a brain drain and then they'll kind of be centered. But I'm just very curious as to how it'll pan out on a global level.
Well, the drain can go the other way later, and I think people have come to Britain and contributed, but then moved to other locations. And if Britain can't pay, then I think workers will go elsewhere. But independent of the people moving, I think the technology can move and move very quickly. And of course, the large international firms who operate in this sector, they see borders as less significant as the workers, and they can move the technology and they can move their investment plans to different countries. So I would hope that all the fantastic renewable schemes that we see, we can exchange and we can compare, and we can promote the best in class in order to make these solutions global.
I think in terms of the situation has reversed from what it was like 30, 40 years back, and I see it changing another 25 to 30 years in future.
Yes.
Today, the way I see it is the UK is ahead of India in terms of the standard of living and the work culture. This has been my experience. But in terms of pay, I don't see, especially in terms of savings, I don't see how the UK goes ahead because the taxes are much more and the expenses are incurred in pounds. But of course, in terms of work culture, uh, it is much higher, and that the reason why people will want to come here. But again, another 25 to 30 years down the line, I wouldn't know. With the they may even go for a immigration plan like Canada and Australia. So, but still, but as the standard of living of people in India improves, people would be wanting to stay back with their families and not come to a foreign.
Well, thank you very much for this opportunity. It's been brilliant, and the coffee and the discussion has been fantastic. But there's one thing I'd really just like your reaction to right now. So clearly, we've had a difficult beginning to the autumn in the UK, but we're now currently in our government under new leadership. And I really just wanted to close with a very positive and optimistic view about how you view the opportunity we have in the UK to be led by such a significant new leader.
I think it speaks a lot about the British society. That is the kind of meritocracy that is present in the British system, which allowed Rishi Sunak to work his way up in a conservative party, not a liberal party, and become the prime minister.
I think I'm going to be a little cocky about this because I spoke about the concept of brain drain, and I really very strongly believe about the power and potential that Indians do have to lead every workplace, be it multinational corporations across the globe and now to one of the most first world country in the world. It means a lot, and it's a very significant moment. He is the first prime minister of color, and he's brought about a lot of changes. So if it meant reversing the entire colonization of over 100 years of to an Indian, and he's ruling it over. He's also brought about a lot of changes. He's gotten a dog, which was again not allowed. It gives us a lot of hope as migrants again. It just means that tomorrow, if I'm dreaming, I'm not going to be restricting myself to any position. So it's a great moment, I think, for all of us.
For me, I can see that he can bring a lot of changes in India as well as to the UK, because his father-in-law is an Indian himself. So I think there can be a lot of opportunities for Indian to migrate from India to UK, and there will be a much better trade agreements between them. So let's see where this goes.
Yeah, when it comes to Rishi Sunak, when he was the chancellor, he actually inspired hope when he actually became the chancellor, let alone now the prime minister of UK. I saw a person of color rise through the ranks within a conservative party, just like Rahul mentioned. But still, not to be very pessimistic, but I'd still like to hold my horses and see how he performs at the top job. Because when you are a chancellor, you still have a directive to go about, and when you are a prime minister, you are being looked up to lead things. And he has come in at a very critical juncture in UK's history. And I have hope with how he conducts his business. And I'm very optimistic, but I still hold my horses. With the fiscal tightening that he is going about, I think in the short period of time, the government will be able to shore up their reserves, and after the year, we'll start to see whole series of actions and packages that they can roll out, just like he did during COVID.
I agree. Thank you very much for that, and for finishing on such an optimistic and positive note. Thank you very much for the opportunity to have this great discussion and for the coffee. And thanks to LUIFS for organising this fantastic conference session. And we look forward to many, many more in the future to come. Thank you.
Thank you.
Thank you so much.
Getting to learn so much about the climate in India compared to UK, it's just so interesting. It's the kind of thing I never thought I'd be learning about, but here I am.
That's why you come to LUMS and you join LUIFS and you watch the Special Brew.
So that was the first episode of the Special Brew. We're trying to make a recurring segment to help all students of LUMS kind of understand topics that are ongoing. We're trying to get academics, maybe experts, we don't know yet, but this is the first episode and it could go anywhere. This is an initiative from the Lancaster University Investment and Finance Society. Sorry for that. But we hope this helped you, and you should
Like, share, and subscribe. And leave any comments if you have any tips, if you want to get involved as a professor, or just a member of the panel. And if you have any advice for any future episodes, just get in touch.
And the recipe for the brew is in the description.